Welcome to the Finance Club. In this video we are going to talk about Dividend Aristocrats to buy now. So before starting, please like this video and subscribe to this channel for future updates. Investing in dividend stocks, like investing in any other company, may be unpredictable, but there are certain indices to look to for guidance in this area. These indexes are the Dividend Kings, Champions, and Aristocrats, which are all made up of dividend companies that have proved to be stable and dependable in terms of payments and dividend growth over time. As a result, companies like Target Corporation, NYSE, TGT, AbbVie Incorporated, NYSE, ABBV, MasterCard Incorporated, NYSE, MA and Chevron Corporation, NYSE, CVX, may be safer and better choices for the average income investor. What does it mean to be a dividend aristocrat? Any S&P 500 business that has regularly raised its dividend yield for at least the last 25 years is considered a dividend aristocrat. For income investors, these publicly listed businesses are among the finest and most dependable investment choices. The Dividend Aristocrats list currently has about 65 businesses on it. The S&P 500 Dividend Aristocrats Index has returned approximately 28.3% in the last year, and about 17.47% year-to-far, according to S&P Global. The index's total return for the last year was projected to be 31.62%, with a 19.32% year-to-date return. This good performance, along with the high return provided by these companies, makes them fantastic investments. For example, according to Reuters, the S&P Dividend Aristocrats Index paid a dividend yield of approximately 2.15% in July 2021, compared to 1.48% for the 10-year Treasury, making these companies more appealing to dividend investors. Even for the smart money, investing is becoming more difficult by the day. The shifting financial environment is reverberating across the hedge fund sector. Its image has been damaged in the past decade, when its hedged returns failed to keep up with the market index's unhedged returns. Insider Monkey's analysis, on the other hand, was able to predict ahead of time a small set of hedge fund holdings that had outperformed the S&P with tongue sticking out 500 ETFs by more than 124 percentage points since March 2017. Our monthly newsletter Stock Selections returned 186.1% between March 2017 and July 2021, compared to 100.1% for the SPY. By more than 124 percentage points, our stock selections beat the market. See the details here. As a result, we think hedge fund sentiment is a valuable signal that investors should monitor. To get our articles in your inbox, sign up for our free newsletter on our site. Number 6. Cardinal Health Incorporated, NYSE, CAH. Cardinal Health Incorporated, NYSE, CAH, is a provider of comprehensive healthcare services and products. From its headquarters in Ohio, it primarily operates in the United States, Europe, Asia, Canada, and worldwide. On our list of cheap dividend aristocrats to buy right now, the firm is ranked 6th. Cardinal Health Incorporated, NYSE, CAH, has a hold rating and a $51 price target, according to Deutsche Bank, as of August. Cardinal Health Incorporated, NYSE, CAH, reported 77 cents EPS in the fiscal fourth quarter of 2021, below expectations by 43 cents. Revenue was $42.59 billion, up 16.07% year-over-year and $2.37 billion more than expected. Cardinal Health Incorporated, NYSE, CAH, is up 0.49% in the last 6 months and 1.61% in the last year. Cardinal Health Incorporated, NYSE, CAH, was owned by 40 hedge funds out of the 873 monitored by Insider Monkey at the end of the second quarter of 2021, for a total of $897 million. This compares to 39 hedge funds with a total position worth of $967 million in the previous quarter. Number 5. Amcor plc, NYSE, AMCR. Amcor plc, NYSE, AMCR, manufactures packaging for the food, beverage, medical, and pharmaceutical sectors, as well as fresh produce, snack food, personal care and other markets. It was established in 2018 and ranks 5th on our list of inexpensive dividend aristocrats to buy today. Macquarie's John Purtell upgraded Amcor plc, NYSE, AMCR, to an outperform rating in July, up from a neutral rating before. Amcor plc, NYSE, AMCR, reported 18 cents EPS in the fiscal third quarter of 2021, surpassing expectations by 1 cent. The company's sales was $3.21 billion, up 2.1% year-over-year, and up from $3.1 billion in the prior quarter. Amcor plc, NYSE, AMCR, is up 17% in the last 6 months and up 12.48% year-to-date. 16 hedge funds out of 873 monitored by Insider Monkey had positions in Amcor plc, NYSE, AMCR, worth $212 million at the end of the second quarter of 2021. This compares to 16 hedge funds with a total position worth of $226 million in the previous quarter. Number 4. Walgreens Boots Alliance Incorporated, NASDAQ, WBA. Next on our list of inexpensive dividend aristocrats to buy now is Walgreens Boots Alliance Incorporated, NASDAQ, WBA, a holding company. It comes fourth on our list since it owns and runs the retail drugstore brands Walgreens and Boots. As of July, Truist analyst David McDonald has a hold rating on Walgreens Boots Alliance Incorporated, NASDAQ, WBA, with a $52 price objective. Walgreens Boots Alliance Incorporated, NASDAQ, WBA, posted an EPS of $1.38 in the fiscal third quarter of 2021, surpassing expectations by 23 cents. The company's sales was $34.03 billion, which was $526.6 million more than expected. Walgreens Boots Alliance Incorporated, NASDAQ, WBA, has increased by 1.5% in the last 6 months and is up 17.51% for the year. Walgreens Boots Alliance Incorporated, NASDAQ, WBA, was owned by 41 hedge funds out of 873 monitored by Insider Monkey at the end of the second quarter of 2021, for a total of $1.1 billion. This compares to 41 hedge funds with a total position worth of $1.1 billion in the previous quarter. Number 3. People's United Financial Incorporated, NASDAQ, PBCT. The bank holding firm. People's United Financial Incorporated, NASDAQ, PBCT, comes in third on our list of inexpensive dividend aristocrats to buy today. People's United Bank, which has approximately 403 branches in the United States, is owned by the business. Compass Point analysts gave People's United Financial Incorporated, NASDAQ, PBCT, a neutral rating and a $19.50 price target in May. People's United Financial Incorporated, NASDAQ, PBCT, had an EPS of 41 cents in the second quarter of 2021, surpassing expectations by 8 cents. The company's sales was $479.90 million, however it fell short of analysts' expectations by $17.70 million. People's United Financial Incorporated, NASDAQ, PBCT, is up 28.05% so far this year and 57.55% in the last 12 months. People's United Financial Incorporated, NASDAQ, PBCT, was owned by 24 hedge funds out of the 873 monitored by Insider Monkey at the end of the second quarter of 2021, for a total of $219 million. This compares to 20 hedge funds with a total position worth of about $208 million in the previous quarter. Number 2. Exxon Mobil Corporation, NYSE, XOM. Exxon Mobil Corporation, NYSE, XOM, is a multinational energy corporation that produces and transports crude oil and natural gas, as well as petroleum products, petrochemicals, and other specialized goods. On our list of cheap dividend aristocrats to purchase right now, the firm comes in second. Analyst Werner Eisenman of DZ Bank gave Exxon Mobil Corporation, NYSE, XOM, a hold rating and $62.50 price target in August. Exxon Mobil Corporation, NYSE, XOM, reported an EPS of $1.10 in the second quarter of 2021, surpassing expectations by 11 cents. The company's sales was $67.74 billion, up 107.77% year-over-year and $3.02 billion more than expected. Exxon Mobil Corporation, NYSE, XOM, is up 2% in the last 6 months and up 33.64% for the year. Exxon Mobil Corporation, NYSE, XOM, was owned by 68 hedge funds out of 873 monitored by Insider Monkey at the end of the second quarter of 2021, for a total value of $3.7 billion. This compares to 65 hedge funds with a total position worth of $2.8 billion in the previous quarter. Number 1. AT&T Incorporated, NYSE. AT&T Incorporated, NYSE, is a telecommunications and communication services business that ranks first among our inexpensive dividend aristocrats to purchase right now. Broadband, wireless voice and data communication services, and other services are available through the business. As of July, Deutsche Bank has a buy recommendation on AT&T Incorporated, NYSE, with a $37 price target. AT&T Incorporated, NYSE, reported 89 cents EPS in the second quarter of 2021, surpassing expectations by 9 cents. Revenue was $44.05 billion, up 7.56% year-over-year, and $1.32 billion more than expected. By the conclusion of the second quarter of 2021, 68 hedge funds out of the 873 monitored by Insider Monkey had a $2.9 billion position in AT&T Incorporated, NYSE. This compares to 63 hedge funds with a total position value of $2.7 billion in the previous quarter. What do you think about our video? Let us know in the comment box below. Please like this video and subscribe to this channel for our future updates. Thanks for watching.